All right, let's jump right in, shall we? Today we're taking a deep dive into the world of currency markets, specifically the GBPUSD exchange rate. Now, I know that might sound a bit dry at first, but trust me, this stuff actually impacts all of us in some pretty surprising ways. We've got a fascinating article here from Pound Sterling Live that caught our eye. Apparently, the mighty US dollar, the one we all thought was unstoppable, well, it took a bit of a tumble recently. And that got us thinking, what's going on here? What's causing these shifts?
Yeah, it's pretty interesting, isn't it? It seems like the trigger was a bit of an unexpected slowdown in the U.S. services sector.
Oh, really? So what happened? Fill me in.
Well, the Institute for Supply Management, the ISM, they released their services PMI for November. And, well, it came in lower than everyone was expecting.
Uh-oh, that doesn't sound good.
It dropped to 52.1%. Now, that's still technically indicating growth, but it's a noticeable dip from October's 56%. And even more telling, I think, is that it missed the forecast of 55.5%. So, yeah, economists were definitely caught off guard.
Wow, so this slowdown, it really spooked the markets. Is that what sent the dollar tumbling?
Exactly. The dollar's value is super sensitive to economic data, any sign of weakness, and investors start getting jittery. So this unexpected slowdown, well, it sent ripples through the currency markets.
And as the dollar fell, the pound rose. Is that how it works?
Yeah, pretty much. It's like a seesaw, As one goes down, the other goes up.
So in this case, the GBP-USD exchange rate, it went up. By how much?
It climbed by 0.32%.
Interesting. This whole situation just goes to show how much power the Fed really has. They haven't even done anything yet, just hinted at a possible rate cut, and look at the impact.
You're absolutely right. The market hangs on their every word, trying to predict their next move.
So this slowdown in the services sector, it's got everyone buzzing about a rate cut in December.
It definitely has. I mean, several Fed officials have even hinted that a rate cut might be necessary if the economic data weakens further.
A rate cut.
Yeah.
For those of us who aren't, financial wizards, can you break down what a rate cut actually means and why is the market so fixated on it?
Sure. So the Fed, right, they're the central bank of the U.S., and they're the ones who set interest rates.
Right.
When they cut rates, it basically makes it cheaper for businesses and individuals to borrow money. It can stimulate economic activity, which is usually a good thing, but it can also sometimes lead to a weaker currency.
Gotcha. So weaker economic data, it makes a rate cut seem more likely, at least in the eyes of the market.
Precisely. They're connecting the dots, looking for any clues about what the Fed might do next.
So do you think the market might be overreacting to just one report? Or could this be a sign of a bigger trend, something more concerning?
That's a great question. This report is significant, there's no doubt about that. But we also have to remember that the Fed considers a whole range of factors when making decisions.
Like what? What else are they looking at?
Well, keep in mind, the jobs report is coming out on Friday, and that's always a big one.
Oh, right, the jobs report. What are we expecting to see there? And how could that influence the Fed's decision? Whether they actually go ahead with this rate cut or not?
Well, the article we're looking at, it mentions some predictions from James Knightley. He's the chief international economist at ING Bank.
Okay.
And they've run the numbers. They think if the jobs report shows around 100,000 net job creation and the unemployment rate goes up to 4.2%, well, then a 25 basis point rate cut on December 18th becomes very likely.
Wow, that's a pretty bold prediction. What makes ING so confident, do you think?
They're basing it on this combination of the weak ISM report and the potential for a soft jobs number. Basically, they see these two data points, if they both come in weak, well, that could be enough to really solidify the case for a rate cut.
So ING is saying if the jobs report is weak, a rate cut is almost guaranteed.
It's definitely a possibility, but we also have to remember that the Fed doesn't operate in a vacuum. They're looking at things like inflation, global economic conditions, even political developments, all sorts of things.
Right. The whole picture.
Yeah, exactly.
So even though this one report has caused some jitters, it's not necessarily a done deal.
Not at all. The Fed is playing a long game, and we'll have to wait and see how all the pieces fall into place.
Okay, so global events, they can really throw a wrench in things, huh?
Absolutely.
Speaking of which, let's zoom out a bit and look at the bigger picture, the dollar's performance over time.
Yeah, good idea.
The article mentioned it was actually doing quite well in October and November. It seemed like nothing could stop its rise. What was driving that strength? Why was the dollar so strong for so long?
Well, from what I gather, it was a string of positive economic data releases. You know, those reports that come out about jobs, manufacturing, consumer spending, all that.
Right, right.
And those reports, they're all looking really good. That really boosted investor confidence in the U.S. economy. People started thinking, hey, maybe the U.S. is actually doing all right.
Yeah,
And that led to this belief that the Fed might not need to be as aggressive with rate cuts as some had feared. And that, in turn, well, it pushed up U.S. bond yields.
hold on, hold on. Bond yields. Can you back up a second and explain that for
Oh,
us?
sure, sorry. So when you buy a bond, right, you're essentially lending money to the issuer. It could be the government, a corporation, whoever. And in return, they promise to pay you back the principal, the original amount you lent, plus interest. That interest rate, that's what we call the yield.
Okay, I'm with you so far.
So when investors believe the U.S. economy is strong and the Fed isn't going to cut rates anytime soon, well, they're more willing to buy U.S. bonds.
Because they'll get a better return.
Exactly. That increased demand for U.S. bonds, it drives up the prices, which pushes those yields higher.
Gotcha. Higher yield attract more investors, which makes the dollar stronger.
Exactly.
Okay, so that explains why the dollar was so strong for a while.
Hmm.
But then this recent PMI report came out, and now the narrative is shifting, right?
Absolutely. This unexpected slowdown, it's injected some uncertainty into the market.
Makes sense. So it sounds like it all boils down to confidence.
Yeah, I'd say so.
When investors are confident in the U.S. economy, the dollar thrives. But any signs of weakness, any hint of trouble on the horizon, and that confidence can evaporate pretty quickly.
That's exactly what we're seeing here. It's a constant interplay of economic data, market psychology, global events, all feeding into each other.
It's like everyone's glued to the news, waiting for the next economic indicator or Fed announcement that could, shake things up again.
Yeah, it can be a wild ride.
But speaking of shakeups, let's bring this back down to earth for a minute. Our listeners are probably wondering, okay, this is all very interesting, but why should I care?
Right, right.
How does a fluctuating dollar actually impact their everyday lives, their wallets?
That's the crucial question, isn't it? Changes in exchange rates, like this rise in the GBPUSD we've been talking about, well, they have a ripple effect across the economy. They impact things like travel costs, international trade, even your investment portfolio.
Okay, now you're speaking my language. So let's say I'm planning a trip to London next month. A weaker dollar means my US dollars won't go as far, right? My vacation just got a bit more expensive.
Yeah, unfortunately. You need to exchange more US dollars to get the same amount of British pounds.
Makes sense.
It can definitely make your trip pricier.
And what about businesses? How does this affect them?
Well, think about a business owner who imports goods from the UK.
Okay.
Those imports become more expensive as the dollar weakens, which can impact their profit margins and potentially lead to higher prices for consumers.
Wow, so it's a double-edged sword.
It is.
Good for some, not so good for others.
Yeah.
And what about investments? How does this all play out in the stock market?
Okay, so imagine you have investments in a UK-based company.
Okay.
If the pound strengthens against the dollar, your investment, when converted back to US dollars, could actually see a boost in value.
Interesting. So a rising GBPUSD, it could actually be good news for some investors.
Potentially, yes. But it's important to remember that currency movements are just one piece of the puzzle when it comes to investment performance. There are a lot of other factors at play.
Right. It's never that simple.
And diversification is always key.
Don't put all your eggs in one basket.
Exactly.
This is all starting to make sense now. But I have to admit, it can feel a bit overwhelming trying to keep up with all these moving parts.
I know what you mean. It's a lot to take in.
So what's the main takeaway here?
I think the main takeaway is that these seemingly complex market movements, like a dip in the dollar or a rise in the GBPUSD exchange rate, they can have real consequences in our interconnected world.
It's a chain reaction.
Yeah, one event triggers another, and the effects ripple outward, impacting businesses, consumers, investors, everyone.
Exactly.
That's why staying informed about these dynamics is so important. It can help you make more informed decisions, whether you're planning a trip, running a business, or managing your investments.
Right. It's not just about the numbers. It's about understanding the story behind those numbers.
Exactly.
Well, this has been incredibly insightful. Any final thoughts for our listeners before we wrap things up?
Yeah, I just encourage everyone to think about how these global economic trends might impact their own lives. Consider the potential implications for your travel plans, your investments, even your career choices. The world is more interconnected than ever, and understanding these dynamics can give you a real advantage.
That's fantastic advice. It's a reminder that even though these topics might seem complex at first, they really do have real-world implications for all of us. Thanks for joining us on this deep dive, and keep us brains curious, everyone.
Yeah, global events, they can definitely impact things. Speaking of global events, maybe we should zoom out a bit. Look at the dollar's performance, in the bigger picture.
Yeah, good idea. The article mentioned it was doing pretty well in October and November.
And where?
It seemed unstoppable. What was driving that strength?
Well, the article points to a bunch of positive economic data releases, reports about jobs, manufacturing, things like that. They were all looking really good. And that boosted investor confidence in the U.S. economy. People started thinking, hey, maybe the U.S. is actually doing all right, which led to this belief that the Fed might not need to cut rates so aggressively, which in turn pushed up U.S. bond yields.
Hold on, bond yields. Could you back up for a second and explain what bond yields are
Yeah.
and how they connect to the dollar's strength?
Sure. So basically, when you buy a bond, you're lending money to the issuer. It could be the government or a corporation. And they promise to pay you back the principal plus interest. That interest rate is what we call the yield.
Okay.
So when investors think the U.S. economy is strong and the Fed is less likely to cut rates, they're more willing to buy U.S. bonds.
Which drives up demand and pushes yields higher.
Exactly.
So higher yields attract more investors.
Right.
And that increased demand for U.S. assets, that's what strengthens the dollar.
It's all connected.
But now with this PMI report, the narrative seems to be shifting, right?
Definitely. This slowdown has added some uncertainty to the market.
Making investors a bit hesitant about the dollar.
Exactly.
So it really is all about confidence, isn't it?
Yeah, I think so.
When investors are confident in the U.S. economy, the dollar thrives.
It does.
But any signs of weakness, any hint of trouble,
It can trigger a shift in sentiment.
wow, so much can change based on, just one report.
Sometimes, yeah.
It's incredible.
This whole situation is a great example of how economic data, market psychology, and global events all interact.
It's fascinating. But, I have to admit, a little daunting too.
I know what you mean.
But let's bring this back down to earth for our listeners. How does a fluctuating dollar impact their everyday lives?
That's the most important question, right?
It is.
So changes in exchange rates, like this rise in the GBPUSD we've been talking about, well, they can impact a lot of things. Travel costs, international trade, even your investments.
Okay, now you're talking my language.
Yeah.
So let's say I'm planning a trip to London next month. A weaker dollar means my U.S. dollars won't go as far, right?
Unfortunately, yeah, you'd need to exchange more US dollars to get the same amount of British pounds.
So my vacation just got more expensive.
Basically, yeah. But on the flip side, if you were planning a trip to the US, it would be cheaper.
Ah, true. And what about businesses?
Let's say you're a business owner who imports goods from the UK.
Okay.
Those imports become more expensive as the dollar weakens,
Oh, right.
which can impact their profit margins and potentially lead to higher prices for consumers.
So it's good for some and bad for others.
It is.
What about investments? How does a fluctuating dollar impact investments?
Imagine you have investments in a UK-based company.
Okay.
If the pound strengthens against the dollar, your investment, when converted back to US dollars, could actually see a boost in value.
So a rising GBPUSD could actually be good for some investors.
It could, but it's important to remember that currency movements are just one piece of the puzzle when it comes to investments.
Right.
There are many other factors at play.
Don't put all your eggs in one basket.
Exactly.
Diversification is key.
Absolutely.
So the main takeaway here is that seemingly complex market movements, like a dip in the dollar,
Can have real-world consequences.
for everyone.
It's all connected.
It's a lot to think about,
It is.
but it's fascinating, isn't it?
It is.
The world of finance, I mean. It's always changing, always something new to learn.
That's for sure.
Yeah, it really is fascinating. It just shows how interconnected the global economy is, What happens on one side of the world can have ripple effects everywhere else.
Absolutely. And this whole situation with the dollar and this potential Fed rate cut, it really shows how quickly things can change.
Yeah, it does. It seems like navigating these financial waters, it requires constant awareness, like you got to be checking the tides and currents all the time. What advice would you give to our listeners who want to, stay ahead of the curve, make sense of all these market movements?
Well, I think the key is to focus on understanding the underlying forces driving these changes, whether it's the ISM report or the Fed's interest rate decisions or investor sentiment. These factors all interact to create this, this dynamic landscape we see in the market.
So it's not just about memorizing numbers. It's about understanding the story behind those numbers.
Exactly. And by staying informed, paying attention to these trends, well, listeners can make more informed decisions, whether they're planning a trip abroad, considering an investment, or even just trying to understand the economic forces shaping the world around them.
That's such an important point, even if you're not a financial expert. Just having a basic understanding of these concepts, it can really empower you to make smarter choices.
Absolutely.
Well said.
hmm
This deep dive into currency markets has been so insightful. Thank you. Any final thoughts for our listeners before we wrap up?
I just encourage everyone to think about how these global economic trends might impact their own lives. Consider the potential implications for, your travel plans, your investments, even your career choices. The world is more interconnected than ever, and understanding these dynamics can give you a real advantage.
That's fantastic advice. Thank you. It's a great reminder that even though these topics might seem complex, they really do affect all of us. Thanks for joining us on this deep dive, and keep those brains curious, everyone.